Welcome back to Explain the Charts. Today is May 19th, 2025, and we're analyzing the QQQ, the Nasdaq ETF, considering the latest market news and the current chart patterns. First, let's address the elephant in the room, Moody's recent downgrade of the U.S. credit rating from AAA to AA1. This news has undoubtedly shaken Wall Street, and we're seeing its effects in the futures market, as reported by various financial outlets. Dow Jones Industrial Average futures are down, and Nasdaq 100 futures are also dropping. According to Barron's.com, Moody's cited concerns over the potential extension of President Trump's 2017 tax cuts, adding $4 trillion to the deficit. With this in mind, let's analyze what the charts are telling us. Looking at the daily chart for QQQ, we can observe recent price action in light of this news. The market shows a large red candle on May 23, 2024, showing some reaction to the news at that time. The last few candles on the chart, however, show a recent rebound back up in the past few days. Could this be a sign of recovery, or is this a dead cat bounce? Zooming in on the 1-hour chart, we can see the price action in more detail. The 1-hour chart may show more of the short-term trends to take into account. We see choppy activity here, suggesting market indecision in this time frame. Now, let's shift our focus to potential support and resistance levels. Looking back at the daily chart, we can identify a potential support level around the 470 to 480 level from the first quarter of 2025. If the QQQ breaks below this level, we could see further downside towards 450 or even lower, especially if the credit rating downgrade intensifies negative market sentiment. On the upside, the recent swing high around 520 could act as initial resistance. A break above this level would be bullish, potentially leading to a retest of previous highs. For a shorter-term view, let's switch to the 15-minute chart. This chart shows some very recent volatility that may be useful to analyze. Be careful though, the trends will be very short-lived compared to higher timeframes. We're looking at the candle ranges of the 16th of May here. What does this mean for the next few trading days? Overall, the market is currently showing mixed signals. Moody's downgrade has introduced significant uncertainty. We'll need to keep an eye on how the market digests this news. Be very careful about trading in volatile times like these, and be sure to never trade with more than you can afford to lose. The credit rating downgrade also saw the dollar lose ground against its major rivals. In summary, here are some key price levels. Watch for support around 470 to 480. Resistance is around 520. A break below support could lead to further declines, while a break above resistance suggests a retest of highs. Remember to always manage your risk and stay informed about the latest market developments. Thanks for watching Explain the Charts. Don't forget to subscribe for more in-depth analysis.